Hello and welcome to Unacademy, a one-stop destination for all the English medium civil service aspirants. Welcome to another session of Economy Explained. And in this session, let's try and understand what is the importance of India EFTA Trade Pact, or else there is one more name for this, TEPA, Trade and Economic Partnership Agreement. Now, before I start the discussion, a very important announcement. Starting March 16th, we are launching the English online classroom program, another batch. If you are interested, please give a call on this number, and the faculties who are going to take these classes in English medium will be Sarmad Sir, myself, Chetan Sir, Hemabindu ma'am, Mukesh Sir and Abhishek Mishra Sir. Not only this, we are also running a 50% discount now for your subscription. On all your CSE subscriptions, a 50% discount will be provided, and along with that, a 6 months extension will also be provided on your course. With that caveat, let's start the discussion. Now, whenever you come across the term trade agreements, please understand the basics here. There is World Trade Organization, and under World Trade Organization, there is General Agreement on Tariff and Trade, GATT. According to the first article, as per the first article under GATT, there is a provision called as most favored nation. And what do you mean by most favored nation? If India will extend any benefit to its trading partner, let's say India will provide lower tariff or will eliminate a tariff to one of the trading partners, then the same benefit shall be extended to all the other trading partners, provided they have been given the most favored nation status. This is on one side, and on the other side, you are seeing that India is entering into multiple trade agreements, such as we have a trade agreement with ASEAN, we have one with UAE now, we have signed one with EFTA, that is yesterday, we have one with Australia, and whenever you sign free trade agreement, what you generally provide is you will reduce or eliminate various tariffs. So, which basically means India has entered into multiple free trade agreement. So has been the case with many other trading partners or the members of WTO. Is it not violating the GATT provision? Are we not violating the most favored nation provision of GATT? Please understand, there is section 24, article 24, not section, article 24 under GATT, and there is also article 5 under GATS. So article 24 and article 5 under GATT and GATS respectively will allow you to provide exemptions only to those member countries, extend benefits only to those member countries who are part of trade group, who are part of trade agreement. This is point number one, please remember this. Point number two, you will come across a term called as a free trade agreement. You will also come across a term called as TEPA. Just now I told you, Trade and Economic Partnership Agreement. Now many of you will have this doubt, sir, why are we using the term TEPA? Why not simply call this as free trade agreement? I am confused. Please tell me why. Please understand this. Whenever the agreement will cover basically goods and services, that is reduction and elimination of tariffs on goods and services, we will simply call this as free trade agreement. But whenever the agreement, that is the package, will cover goods plus services, along with that, let's say intellectual property rights, investments, etc., that is the package goes beyond just goods and services, we will use different names. For example, we can call this as a comprehensive economic partnership agreement. There is also one more term, comprehensive economic cooperation agreement, but in the context of India and EFTA, in the context of India and EFTA, we use the term the Trade and Economic Partnership Agreement. This is point number two. Point number three, which you are eagerly waiting for, what is this India EFTA agreement? What is the importance of that? Are there any concerns? What are the benefits? Let's try and understand. Point number one in this slide, point number one, EFTA is a group of 4 countries. I am pretty sure you must have heard of this multiple times in the last couple of days. It's a group of 4 countries. We have Switzerland, we have Iceland, we have Norway, right? That is, we have Switzerland, we have Iceland, we have Norway, and finally we have Liechtenstein. Right? These are the 4 countries, and these 4 countries are not part of European Union. They have formed a different association which goes by the name of European Free Trade Association. India started negotiations with EFTA back in the year 2008, and by the year 2013 the differences were so wide the negotiations stalled. After that again the negotiations started, and finally in the year 2024, after 16 years from the year when it started, and after 21 rounds of talks, we have signed a free trade agreement with EFTA now. This is basically the evolutionary part. Now, why this is called as a TEPA? Right? Specifically, why this is called as TEPA? Please understand. Under this agreement, under this free trade agreement, we cover goods and services. I'll discuss that now. We also cover investments. We also cover rules of origin. We are also covering promotion of movement of service personnel, etc., etc., etc. So the coverage under the free trade agreement goes beyond, the package goes merely beyond the goods and services trade promotion. Now, point number 1, what is the provision under this regarding goods and services? Please understand this. India has a trade relation with EFTA. India's trade, basically, if you find out how much is exported, how much is imported, the total value of the trade is over $20 billion. Total value of the trade, bilateral. And don't by heart the number, it is of no importance for UPSC. But out of this, the imports that India does, the imports that come into India are much larger. India exports only around $1.8 billion, that is in the calendar year 23, India exported only around 1.8 billion, which means India has a huge trade deficit with the EFTA. Please remember that. Point number 2, now Government of India has proposed that they will be reducing and eliminating the tariffs on many of the products which are coming from EFTA into India. For example, we import Swiss chocolates, we import Swiss watches, etc. But more importantly, please remember, India will not be eliminating these tariffs immediately. First, the agreement which has been signed, it has to be ratified, and we are expecting the ratification to happen by the end of this year. And once the ratification is done and it is implemented, over a period of time, slowly and steadily, the government will reduce the tariff and eliminate the tariffs. Right? That is basically the idea. So if you are thinking that yesterday the agreement has been signed and tomorrow in the market Swiss chocolates will become very cheaper, you are wrong. It will happen eventually, not immediately. That is another very important point. Next, regarding this particular agreement, there is also provision, I said, regarding investment. There is a provision regarding investment, because please remember this, the agreement has totally 14 chapters. The agreement has totally 14 chapters, and the coverage, right, is very wide, starting from goods and services to agriculture to rules of origin to promotion of movement of service personnel, etc., etc. Now, what is provision regarding investment? Under this agreement, the group of countries, EFTA, has proposed to invest $100 billion. $100 billion in the next 15 years. Please remember, in the next 15 years in India. And when I say next 15 years, now and henceforth, please remember, it is basically 15 years from the year when the agreement will be implemented. If it is implemented from this year plus 15 years. Next year, so next year plus 15 years. So they will be investing $100 billion in 15 years. More importantly, this $100 billion, out of this $50 billion will be invested in the first 10 years, and the next $50 billion will be invested in the next 5 years. Now, what if they are not able to invest? Is there any condition? Is it legally binding? Remember this. The EFTA representatives have categorically stated that this investment proposal is not legally binding. It is not legally binding on them. The governments are not going to invest. the private sector from these countries are going to invest in India. Why, sir? One more point they have mentioned is they are expecting Indian economy to grow at a pace of 9.5% in dollar terms in the next 15 years. They expect that Indian economy will grow at a pace of 9.5% in dollar terms in the next 15 years. You will be thinking, sir, what is the connection? Is there any logic? The logic is that for private sector companies from EFTA, Indian market is one of the largest as well as fastest growing economy. And if India keeps on growing at a very faster pace, let's say at 9.5%, investment requirements will be very high. And these investments, a lot of it, to the extent of $100 billion, private sector companies from these EFTA countries will be investing in India. So it all depends on growth rate of Indian economy now. Now what if they are not going to invest? They will not be able to invest $100 billion. They are not able to do that. In such cases, what will happen? The government of India has stated that, or even the parties, both the parties have agreed to the fact that if they are not able to invest this $100 billion in 15 years, a grace period will be provided, 3 years, and then renegotiations will take place. Even after that, that is 20 years, even after that, if they are not going to invest this $100 billion, then government of India will be allowed to withdraw some of the concessions that they have provided to EFTA. They will be allowed to withdraw some of these concessions that they have provided to EFTA. That is one more very important point. It also has rules of origin provisions. What is this rules of origin? Rules of origin ensures that whenever a trade agreement is entered in two countries or between two countries or amongst multiple countries, one more country which is not a part of the agreement will not be abusing this agreement. That is, let's say there is a country X with which India doesn't have any trade agreement, and when the product of a country X will come into India, government of India will impose a higher tax. Now to escape from the tax, X can export this good to Switzerland, and from Switzerland, this can be exported to India because government of India, let's say, has eliminated tariff on this product entering into India from Switzerland. So there is a potential abuse of the free trade agreement by a country which is not a member of this grouping. That is the reason rules of origin provisions also are present in the agreement. Apart from this, the agreement also mentions that service personnel from India will be given easier access to the market now. Visa provisions will be made much more easier. Point number 5 regarding the agreement, where are we expecting the investments to come from these countries in India? We are expecting lot of investment to enter into chemicals sector as well as pharma sectors. Chemicals, pharma, food processing, etc. We expect a lot of investments from these countries to enter into these areas. And what is the importance? Please remember this. We are importing a lot of goods from China, especially in the chemicals sector as well as pharma sector. In the last 1 year itself, if you look at the last 1 year, the total value of imports that we have done in the chemicals as well as pharma amount to more than $27 billion. So we are expecting investments to flow, production to increase, and import dependence to come down. So these are certain important points regarding the agreement. Finally, let's look at the critical evaluation. That is, what are the benefits associated with the agreement, and are there any concerns? Are there any problems with the agreement? Let's do a critical evaluation. Point number 1, under benefits, our imports will become cheaper, no doubt. For example, I told you, again not immediately but eventually, the Swiss chocolates, Swiss watches, etc. If the tariffs are eliminated over a period of time, imports will become cheaper. You and me as a consumer will get the benefit. Second, investment and employment. Investment and employment. Under this, the proposal is to invest $100 billion in India. And not only this, they have proposal to create direct jobs, jobs to the extent of 1 million in number in India. So investment as well as creation of jobs, beneficial for India. Third advantage, import dependence is expected to come down. Import dependence is expected to come down because we expect investments from EFTA group of countries in pharma sector, in food processing, in chemicals, etc. With higher investment, we expect import dependence to come down. Fourth very important point, we are negotiating a free trade agreement with European Union, and before that itself, we have signed a free trade agreement with EFTA. There are two very important observations here. The members in the EFTA are generally known for the sovereign wealth investments, sovereign wealth funds. For example, there is a sovereign wealth fund owned by the country Norway, and sovereign wealth basically means the wealth funds which are owned by the governments. Sovereign means government. So the Norway Sovereign Wealth Fund is considered to be one of the largest wealth funds in the global market. The value of the assets with this sovereign wealth fund is more than $1 trillion. So these countries are generally associated with sovereign wealth funds. So it could improve the image of India and show to the global market that even with larger countries which have, again when I say larger countries which have huge potential in terms of sovereign wealth investments, India is entering into trade agreements. That is one implication. Second implication is we can use this model that we have signed with EFTA as a model to enter into trade agreement with other European nations. We are yet to sign a free trade agreement with European Union. Fifth advantage, right, is that services sector in India. Services sector in India will get a fillip now. That is basically services personnel, because as already mentioned, under the agreement, the EFTA members are saying we will allow the service personnel from India to enter into these member countries with easier access. Easier access will be provided. So we are expecting the impetus or the promotion of personnel working in the service sector from India to get the benefit. Now, having said so, are there any concerns regarding this agreement? Are there any problems associated with this agreement? Point number one, many experts are concerned that India's trade deficit might widen. India's trade deficit might widen. Why so? As such, please understand, India already has a trade deficit with EFTA. And within that, if you see, out of $1.8 billion worth of exports that India does, around $1.38 billion worth of exports go to Switzerland. These member countries already have reduced their tariff. For example, Switzerland, for many of the imports, it has cancelled or it has eliminated tariffs altogether, which means on one side, their imports into India, because we are eliminating tariffs, their imports into India will increase. We already have a trade deficit with them. And if I want to export, they do not have any kind of tariffs already on these products. So as such, I am not going to get any special benefit in terms of tariff reduction. They already have eliminated tariff. And that is the reason why many of the experts are saying this might actually increase India's trade deficit with EFTA. And please remember, India's average tariff is around 18%. Average tariffs is around 18%, which means we are going to eliminate these tariffs, reduce it to around 0% for most of the goods coming from EFTA into India over a period of time. Second concern, second issue is that even though we have signed a free trade agreement, it is expected that India's agriculture products entry into EFTA will not increase by a large margin. The reason being, their standards, quality standards that they impose whenever they will import agriculture commodities, their quality standard requirements are very, very high. And as such, even before the agreement, India's agriculture exports were not finding a market, importers in EFTA, and experts again are saying it may not change by much. India may not gain much in terms of, let's say, even agriculture exports. Third concern is basically sovereign wealth funds, SWFs, sovereign wealth funds. What is the concern here? I said, if you look at these countries, they have large sovereign wealth funds. For example, Norway has one of the largest sovereign wealth fund in the global market. The EFTA agreement, that is the agreement that we have signed with EFTA, does not have any provision where they will basically be compelled, that is the sovereign wealth funds will be compelled to invest in India. There is no provision which makes it mandatory for the SWEFs to invest in India. Despite having such large sovereign wealth fund, there is no compulsion on them to invest in India. And as such, please remember, the Norway Sovereign Wealth Fund already has an investment to the extent of $17 billion. It already has an investment to the extent of $17 billion. And the fourth concern regarding this agreement is that, no doubt, there is a provision wherein they are saying they will invest $100 billion in India. It is not legally binding. Remember this, it is not legally binding on them. So these are some of the concerns or issues which have been raised by various experts with India signing a free trade agreement with European Free Trade Association. This is the discussion I wanted to have with you people to make you understand what is the importance of the agreement, and under WTO, are there any special provisions to promote such free trade agreements, and more importantly, the critical evaluation of the TEPA. If you like this initiative, please hit the like button, provide your valuable comments in the section below, and if you are yet to subscribe to our YouTube channel, kindly do it now. Thank you. Have a great day.